Welcome, everyone. Thanks for joining us. This is going to be exciting but very insightful training titled The Real Estate Market is Insane, Supply and Demand Explained.
Welcome to REI Pro Talk, where real estate investors turn for the latest news, tips, and tricks from the real in the trenches pros. Tune in to hear Chris Goff, the nation's premier real estate investing powerhouse. Join up with other top pros in the investing world as they cover every topic. No fluff, no filler, no holds barred. All you need to know from start to paycheck.
As you know, over the past few years, we've really witnessed unprecedented changes, volatility in the real estate market from skyrocketing home prices, housing shortages. It's clear that the principles of supply and demand are playing out in dramatic fashion. And understanding these forces is crucial, whether you're a real estate investor or maybe a first-time home buyer or a real estate professional navigating these times. So what we're going to cover is really understanding what is supply and demand. Also, we're going to talk about the current state of the real estate market, factors driving this real estate market insanity. So, why is it happening? Implications for buyers and sellers. And most importantly, I'm going to give you some real estate investor tips. So, how do you handle this? What are we doing? What's that next move for you? And then I'm going to give you some very bold predictions. For those that don't know, my name is Chris Goff. Got over 25 years of experience in real estate investing and coaching. I've successfully closed more than 500 deals, alongside being a three-time best-selling author, co-founder of the REIPro software, and executive film producer of the Folds of Honor documentary. My passion really lies in just generally supporting others in this industry. And my work's been featured on major networks like ABC, CBS, NBC, Fox, USA Today. I have a very special guest. Eric's going to be joining us throughout this presentation. So, welcome, Eric.
Thank you very much. It's good to be here. Thanks for everybody taking time out of your day, your busy day, to come meet with us and hang out with us for a little bit. Hopefully, we can answer some questions and clear up a little bit of this whole thing about real estate right now, supply and demand, and crazy times we're in right now. We're in some wild real estate times that I don't think a lot of people have ever seen before. So we got to learn how to figure out how to navigate this, because there's always ways to navigate. Regardless of what the market's doing, there's always ways to navigate real estate. We just have to figure out what those are and what are the rules, but also what are your strategies. And that's most importantly is knowing those strategies so you can basically invest in real estate regardless of the market and the interest rates and supply and demand. There's always going to be a deal. You just have to find it. It's great to be here.
Yeah, well, glad you're here. Hey, did you ever? I read this book years ago. It was called Who Moved the Cheese?
I haven't read
So,
that one.
yeah, so the whole idea is like we're so used to like just going down one path and something happens and you gotta, what do I do now?
Yeah.
What turn do I take? It's like who moved the cheese? Like where did it go? And you're
Yep.
exactly right. That's something that everything can be overcome. And every time there's always an issue, it doesn't matter what it is, somebody gets really wealthy from it and somebody loses a lot of money from it. It's understanding how do we capitalize on that opportunity. It's seeing the opportunity, understanding why it's there to begin with. And that helps us maneuver and find that cheese. I think that's kind of what tonight is really about. All right, so the very first thing is just understanding supply and demand. Real estate supply, and it may seem basic for some of you, but it's going to all tie in the total amount of properties available for sale or rent in the given market at various price levels, including both new construction and existing buildings. And then we have real estate demand. So the desire of financial ability of buyers or renters to acquire properties at different price points within a specific market. And it's really the balance between supply and demand that's going to determine prices, market conditions. And just a simple chart right here, you could see that as demand increases and supply is low, prices go up. Supply is high and demand is low, prices come down. But I'm also going to throw in some kickers through this presentation to show you what's really going on out there right now. I know people have always heard this, like, is it a buyer's market? Is it a seller's market? And I know you've heard me say for years, I don't really care what market we're in, actually, because it just kind of helps me understand the strategies that are best applied to the market that we're in versus saying, hey, it's a buyer's market. It's a great time to go and buy property because there's an abundance of properties. We can get them at a better price. Whereas a seller's market, you have fewer properties compared to the number of buyers. That's an important fact right there, the number of buyers, resulting higher prices, favorable conditions for sellers. And it's very interesting as we point out some of the factual pieces tonight that I pulled. Kind of how'd we get here? 2000s housing bubble. So early 2000s, we saw an unprecedented rise in demand due to easy credit, speculative investments leading to overbuilding and inflated property prices. And then the 2008 financial crisis. That's when the bubble burst, causing a massive decline in demand and excess supply, leading to plummeting prices and a severe housing market crash. I remember people were literally walking away from their home. Foreclosures were crazy. Then we get to 2010. So they call it the recovery and growth period. So the post crisis recovery. So government interventions and low interest rates help stabilize and it gradually just revived the market. Supply and demand, people always say, is just finding that balance. And that's what happened. And then we get to the mid 2000s onward, rising employment, economic growth, restored consumer confidence, reviving that demand. We get to the 2020s now. And then, of course, everybody knows the pandemic. This introduced volatility, initially reducing demand, slowing construction. However, remote work just trended and combined with the low interest rates, spiked demand for mostly suburban and rural properties. I'm going to dig more into kind of 2024. High demand, limited supply. So, demand for residential properties remains robust. A growing population seeking home ownership really contributes to the sustained demand. But at the same time, we have these limited shortages. Despite increased construction activity, supply has not kept pace with demand. So, material shortages, labor constraints, regulations that have really slowed down any kind of new developments. The last time I checked, from what somebody told me, is we were about a 10-year behind on construction at this time. And we have price appreciation. So home prices continue to climb, driven by this high demand, limited inventory. This trend is particularly noticeable in suburban rural areas where buyers seek more space, maybe better living conditions post pandemic. I would say price increase has led to affordability issues, especially for first time home buyers. And I was talking with one of my students this morning about this, that her kids are worried like they can't afford a house. It's like, I know you got to shack up with five of your best friends to really afford a property out there. Just some market hotspots. Urban areas always seeing resurgent. I mean, that's really kind of where everybody went to. And I get it, the cities have grown and so forth, but it's really kind of the growth around it, which has made it really highly competitive. And it's all because of the remote work has allowed many people to move from the city centers, just kind of fueling demand in these suburban rural areas. Interest rates and financing. Obviously, everybody knows high interest rates. Number one, it's being driven by the central bank's efforts to control inflation and stabilize the economy. That's why it's there. These rates have really led to higher mortgage costs, reduced purchasing power for buyers, making homes less affordable, decreasing demand for sellers. This means a smaller pool of buyers, longer time on the market, and pressure for lower asking prices. Overall, market activity has actually slowed down. I'm going to show you some stats that we pulled on this. It's kind of crazy. Another thing, Eric, I don't think a lot of people realize that in 2020 there were like more home sales than previous years. Like, and the whole it seemed like the whole country was shut down, but people were moving. Economic indicators, look, inflation is the big one here. This is pushing up the cost of living, including housing costs, further influencing market dynamics. And that future outlook, with everything going on, the market is projected to remain strong. And it's really being supported by ongoing demand for housing. To kind of sum it up, the current, we'll say, real estate market is marked by high demand, rising prices, supply constraints. It's crucial to understand these conditions in order for us to make informed decisions, whether you're buying, selling, or investing in real estate. But I want to give you one key tip here. You really have to do your own research, due diligence, because things can obviously vary across the country. So this from Freddie Mac. This is very interesting. Summed it up here is to bring the vacancy rate, both rental homeowner, back in line with historical averages. We would have to add 1.5 million to balance the market, meaning that we're under supply, which again, we get it. There's a demand for housing here. And it's very interesting when you go back to, it looks like around the 2014 timeframe. And then, of course, as interest rates, hit a historic low, that's never even, we probably won't even see that again. But obviously, demand increase, price increase, but we're really undersupplied. This is also very interesting. And again, I'm just trying to point out some of the things that I have done research on because I see it in so many local markets, but it's hard to explain because I'm not in every market. Altos research here shows current homes for sale. Just to clarify, these are single family homes that are currently on the market. And it's showing that they're 37% more homes for sale than last year at this time. And some states are showing upwards to 70%, like Florida, Texas, and Georgia. So you can see there is a rise in inventory throughout the country. One thing that I love to do, obviously go into REI Pro, but I love to run statistics. This is such an important number. I just happen to pull up Plano, Texas. As you can see, I've got several different areas here, but I like to see what's happening over time. Is there a dramatic change over time, or is it just kind of a month to month change? So you can see in home sales, they were down 145 based on the previous month. Home price has also dropped, which then obviously dropped the cost per square foot, the price per square foot there as well. But I want to look at it over the course of time. Although it's down, it's somewhat consistent. Small spikes can really make a difference on when do you buy, when do you sell. Another thing I love to see is how many lead types are actually in Plano as of today. From an absentee owner, maybe a pre-foreclosure, a vacant property, I can see those stats right here. Obviously, if you're not a member of REI Pro, you could sign up for a 14-day free trial there. This is really based on active inventory, but this is really important for investors, and I'm going to share with you why here shortly. Around October is usually the slow down period, and that's kind of where they're talking of this slowdown. You can see the different years in the line graphs, maybe kind of hard to see if you're on a phone or something like that, but 2024 is kind of that dotted there line, and they're projected to have 20% more homes than last year, which shows, we talk about supply and demand. If the demand is high, there's a shortage of homes, but here we have more homes for sale than we did last year. If all this seems confusing, don't worry, because I'm going to break this down on how it affects real estate investors here. To me, Eric, you're a professor. I think teaching the why, like why are we here to begin with, what's affecting it is so important to understand. How do we move forward?
Yeah, it's important to know the how and the why. We need to understand the dynamics of what's causing the market to do the things that it's doing. And that involves inflation, that involves interest rates. We have to understand why are the interest rates high, because the Fed is raised because of inflation. We've got to keep that under wraps to a certain extent. So we have to understand the how and the why of why the government and the Fed is doing the things they do, but they also have to understand that that has a trickle-down effect for people that are involved in real estate, whether it be investors or buyers or sellers, whatever the case may be. So if you understand a little bit about business and a little bit about economics, have that education so you can make better choices. moving forward? Is this a good time to invest? Is it not a good time to invest? Is it a good time to buy? Is it a good time to sell? And if you know the market trends, then that gives you more information. And the more information you have, the better decisions you can make.
First one, economic indicators. So just consider what happens in a strong economy. Higher employment rates, increased wages make people feel more confident about their financial situation. This boost in confidence means more people can afford to buy homes, leading to higher demand in real estate. On the other hand, a weak economy characterized by high unemployment, reduced incomes, fewer people have the financial resources to purchase a property. As a result, the demand for real estate generally just goes down the drain. Now, if we shift our focus to the supply side, this is going to affect construction activity. In a robust economy, the anticipation of higher returns is going to encourage developers to build. But in a sluggish economy, investment decreases, development projects are often slow. They're slowed down due to lower expected profits. And I think this goes back to, are we really behind on construction? I know in so many areas, like apartment complexes are just going up left and right. And if you keep an eye on these economic indicators, you can better anticipate changes in both supply and demand, which is going to help you make more informed decisions in this business. A lot of people don't think about this outside of one part of this, which interest rates. But then you also have tax incentives. Housing policies play such a crucial role in shaping the real estate market. But housing policies implemented by governments, such as zoning laws, development grants, affordable housing programs, can influence the supply of available homes. And in summary, interest rates, tax incentives, housing policies are all these interrelated forces that just drive the real estate market. Pandemic impact. I mean, first, there was a shift in housing demand. With more people working remotely, they needed larger homes with dedicated office spaces. That became really paramount. And this just increased demand, especially in the suburban and rural areas. And guess what? It drove property prices up. And then next, we experienced a supply chain disruption. So this led to shortages in construction materials and labor, slowing down new home construction. This limited supply just further driven up prices. I can tell you, Eric, we had a little bit of hurricane damage on the backside in 2020 after the pandemic. So September of 2020, it took us a year to get the materials and put up.
That does
Absolutely.
surprise me.
And everybody knows like lumber prices went up like 300%. It was so hard to find. We had to put 6 LVLs across the backside. It was difficult to even find the LVLs. We had got almost, I think it was 5 of them. And then it took like 2 months, and somebody had to drive to a different city to pick up one more. We also at that time had historically low interest rates, and that played a major role. These low rates obviously made everything cheaper for people to buy stuff, and it wasn't just housing. And this just intensified like crazy. If you just bought in 2020, you could have resold that a year or two later for so much more money. And then we saw changes in the migration patterns, obviously the flexibility of remote work. So many people really just chose, hey, I can go live where I want to live. I'm going to go live in the mountains. I'm going to go live on the beach. And that just spiked those areas, which then caused rapid price increases. And finally, there was an uptick in investor activity. So traditional investments being so good for investors at that time. And also, I believe a lot of people thought, Eric, that it was a safer investment because when you can borrow money so cheap on a house, I mean, we got down to such low interest rates. That was a safer bet for so many people that wouldn't generally even be in the real estate market.
Oh,
What are
yeah.
your thoughts on that?
Yeah, I think it definitely created, for anybody that was investing, that you look at the bottom line, your return on your investment is going to be better. The amount of money you need in the market is going to be less. for investments and things of that nature. Your cash flow is probably going to be better because you have a lower interest rate, and if you're holding a mortgage or any type of note on that property, your cash flow is going to be better. The appreciation value went up too, so you get lower cost overall. You get positive cash flow on most of the properties because of the low interest rates. Your equity is going to increase, and if you put a little money into the property, even more so, then it increases its equity. So it was like a win-win-win situation for investors back then, and it's changed. It's changed a lot now, but that was kind of the prime time. If you were able to get in then, you were golden.
Yeah, I mean, this pandemic, just the impact on housing preferences, supply chain issues, low interest rates, that shifting in migration patterns we talked about, and just the heightened investor activity. I mean, these has really driven these unprecedented changes leading us to where we currently are. And I call it the insanity in real estate, is what I call it. I want to share just some tips for if a buyer was here, maybe you're looking to buy your next home. We'll talk about real estate investing specifically. One of the key tips for buyers is to really focus on value. What I mean by that is there's so many properties, builders, like, have you ever seen those neighborhoods where they build them as fast as they can and as cheap as they can, and they sell them for as much as they can? There's no attraction to the property. It's not near anything. It's not really necessarily a long-term good buy. So to me, even if you in what a lot of people are saying are, high pricing, just make sure you have value and don't think about just maybe a year from now. Think about 10 years from now. Value to me could be near up and coming area, obviously. It could be near attractions, it could be near major universities, it could be near the water, it could be near better shopping. To really find that value, I think is really going to help. If you're looking for a property that's currently listed on the market, find ones that have been listed for longer than 60 days, because generally this is where you're really going to have that motivation start to come in. In areas with lower insurance and tax, this is something a lot of people aren't talking about, is how much insurance and taxes have gone up. It is absolutely ridiculous. I know my brother-in-law, he lives in outside of Nashville, Tennessee. His taxes have gone up over 50% in the last 2 years. My taxes have gone up, but my insurance has doubled. So I'm not sure a lot of people really pay attention to insurance and taxes, but gosh, if you could find a place, right? And I know this can't work for everybody because you got to live certain places. Could be school systems or whatever it may be. But if you can find a place with, lower taxes and insurance, that's really going to pay off. And then I want to give you a couple of sellers tips here as well. And this also applies to kind of any kind of rehabbers out there. Just make sure you do not cut corners on essential features of a property. And what I mean is, everybody talks about the kitchen, the bathrooms type of thing. Buyers are super picky right now. There's too many other properties, especially with the increased inventories of properties on the market. There's too many properties where they could find that updated kitchen. People don't have the extra spendable income to go put 50 grand into a house to make it theirs. That's the biggest issue that we're seeing right now. And also get quality pictures. God, that sounds so basic. And if you could do 3D walkthroughs of your property where people, there's a Matterport out there that they literally come in. It's like a 3D. You know how you can walk in a room and you could circle around, but it can also measure the room, and people could really feel what it would be like. And the reason why you have to have this is because you won't get appointments scheduled. Obviously, the pictures have to draw people in. Obviously, the house has to sell itself. And price does matter. You have to think about, obviously, you want to get as much as you can for a property, but you're also in competition with other properties that have been on the market too. Price obviously needs to be priced at a certain rate, because the last thing you want as a seller is to have your property on the market for 12 months because it didn't sell because you wanted what you wanted. So be careful, what's the cost of that to you? Really understanding where that price needs to be is obviously important. Obviously, we run comps through REIPro. We could do that in all 50 states. If you have an agent, just make sure they understand those numbers and really price it right. And then let's talk about real estate investors because really that's what most of us are here for, anyways. It's really interesting. We have high prices, high interest rates, and this obviously brings challenges. You may be shocked with some of the tips I'm going to give you, but I'm going to explain why. Number one is less competition. The reason there is less competition is because most investors only invest one way, meaning that if you're maybe a buy and hold investor who needs financing, I want you to think about you're a buy and hold, but you need financing. Your monthly payment's probably going to be higher than what you can rent it for. If you're a rehabber, your costs are going to be higher than years before, and your buyer pool is limited. So if you're looking to flip your first house, or maybe you're trying to figure out how to close more deals, you need to be what I call a multiple strategy investor. And this is the investor who really understands multiple ways how to buy and sell real estate. Creative finance opportunities. And I added this higher seller motivation. I want to explain. Seller financing, lease options need to be in play for you right now because sellers are going to become more motivated if they can't sell. Investors that understand these strategies are going to be able to offer sellers another way of buying their home that most people don't even understand. If you're that person looking to close more deals, these are essential strategies that really need to be in the toolbox. Stay informed on market trends. I've done some basic research. I see what's going on, but I'm in REIPro. I can see kind of where the trends have been, where it's going. And I think it's so important that you stay updated. Here's a good example of a housing policy you might not be thinking about. If you're that investor, it's like, oh my gosh, I want to get into the vacation rental business. You're like, okay, well, you forgot to research that maybe your area, which could be a county, it could be a city, and it also could be an HOA, don't allow it. Understanding really those policies and trends of things that are happening is super important. It's going to help you make obviously better decisions. Like I said before, search for on market properties. I don't care if you're an investor, search for on market properties, search for the ones 60 days. Right? Obviously, you're searching for any kind of motivation, things of that nature. This opens the door when you understand creative financing because price isn't always the end of end all. It's really the terms. Search for off market properties like vacant properties, even land, pre foreclosures, obviously absentee owners. So, what I thought I would do, Eric, is actually jump into REI Pro because I wanted to actually show people how I would actually search for these types of properties.
And one other thing I want to kind of piggyback on that
Yeah,
about
go for it.
market trends you were mentioning. So a lot of people are like, "Oh, I'm going to go buy this property. It's a great property, and I'm going to do I'm going to turn it into a short-term rental." But I've seen this happen quite a few times. People have forgotten to check with the county and the state, and usually it's the county or the municipality where that property is, and you're so focused on the deal, you forget. It's like, "Oh, I'll just take care of that later," but you don't realize that that county or municipality has changed its rules on short-term rentals, and now they don't allow them. So now you're all of a sudden stuck with this property. You're like, oh, dang, that wasn't what I had planned. So now you have to come up with a different exit strategy. So understanding a lot of these different strategies are really important, but a lot of this, you need to do your due diligence. You need to understand. If you think you're going to do a bed and breakfast or an Airbnb, great. They're very profitable, but do your research, find out what the rules and the regulations are for the county or municipality. Do they allow that? Are there certain rules? What kind of fees do you have to pay? There's a lot of things that people forget about, but that's why that research comes into play. You got to know the how and the why, and doing that background research will prevent you from making a mistake that you do not want to make.
Very good point, which just to add one kind of example, you buy a property, finance is kind of high, but you do it anyways because you know if you rent it on a weekly basis, you can get X dollar amount over the month, which could make you some really good money over the course of the month. But if something did change and you had to go to a normal rental, that rental rate may be less than what you're paying for the property. Every time I look at a lead, I always try to say, okay, if I did it this way, what are my exit strategies? Because even if my intention is to use it as a vacation rental, I always have to assume, okay, yeah, but if I buy it at those numbers and this doesn't work, what else could I do with it to make money with? And too many people don't think of that multiple exit strategy. The more exit strategies that you have when you buy a property, regardless on price or terms, the more you have, the much better position you're in 100% of the time. I'm going to go to REIPro. I went to Plano, so I figured let me just pull Plano, Texas as an example. I'm going to use absentee owners. Now, you can combine these with others such as vacant properties and so forth, but I want to show you a couple of filters that I really like to use, especially because we're talking about, creative financing is definitely a tip that I'm going to give you. So I'm going to go in. If I just am interested in single family, I'm gonna let everything else go. I'm gonna exclude HELOCs. Obviously, you can put in some prices here, potential equity in the property. But the one thing that's super important that I wanted to share with you, which is a awesome tip for every investor out there, is the last sold date. I want you to go to custom. And then what I want you to do, and I'm going to actually use January here, but I want you to bring this back to 2019. And then I'll just go one here and I want you to go to 2021. So this time frame between 2019 to 2021, it could be a little back from that, is when people bought properties at historical low mortgages. So I know as an investor that if I can approach an owner, number one, with a seller finance, I'm more likely to get a low interest rate and a much lower interest rate than if I went to the bank today. It doesn't mean that the owner's going to want to do owner financing. It doesn't matter because this is the point of marketing at this point. And if they are open to it, it automatically introduces that particular strategy because they already have a low interest rate. I don't care if there's an existing mortgage on the property. Okay. So somebody that bought a house in, let's say 2020, they have a 3% interest rate as an example. I could go in and buy the house today, maybe at 5%, which is definitely lower than if I got any kind of financing today. So it leaves that opportunity open for you if that all works out between you and the owner of offering that particular strategy. Obviously, you can go into some other filters here. A lot of people don't think, sometimes we actually target properties that don't have much equity, but they have a low interest rate, which is pretty awesome. So this really kind of brings our list down. I don't go into each individual property to get the details because at this point, if it's an off-market property, I don't even know if they're interested in selling, but I won't ever know if they're interested in selling unless I actually reach out to them. We could do that in various different ways. What I do from here is actually put it in what we call a marketing campaign. Once I do that, I can send direct mail, I can send a letter, I can send a postcard, I could do bulk skip tracing, I can make phone calls. At the end of the day, are you interested in selling? I know it's kind of a quick rundown, but it's a point that I wanted to share with you in the filter that these are going to be candidates for an awesome deal seller financing. So, motivation is the key. I think when I teach this, people don't really take me that seriously about it, but I can tell you this right here, what I'm going to teach you is probably one of the most important things I want every investor to know. Traditionally, we talk about motivated sellers. Got it. But why? I want to talk about a non motivated seller first. So, this is the person that wants to sell. They don't need to sell. Although you can acquire some good deals, this really isn't where you want to spend your time. I don't care if it's currently on the market, I don't care if it's an off market property. In order to become a better investor, you really need to improve your skills at qualifying sellers. And that is what I call really that motivation, understanding what that motivation is. Because this is going to present opportunities for you because they need to sell, they must sell. It's the difference between a non-motivated seller and a motivated seller, such as maybe a job loss or rising cost, health, divorce, relocation, debt reduction, and so many other reasons. And this is really why I say it's the best takeaway, because it's the situation of the owner that dictates how the home is sold and what it sells for. And if you focus on finding those situations, you're going to close more deals, period. So when I talk to an owner, I'm really trying to understand what that situation is, because to me, that is going to help me determine what the best strategy that they are more likely to go down with. This is going to work, or this could potentially work, or that could potentially work. It helps me craft a better offer. It helps me understand what I call a seller's pet peeves. Is it really the price, or is it the down? Do they really need all the cash, or do they just need some? It helps me understand where the monthly payments need to be, why they need to be covered. It really helps me in so many ways. And that's why we can close more deals, is because I understand that difference. All right, I'm going to give you a couple of projections. These are my projections. I'll just give you projection number one, because this one right here to me is probably something a lot of people aren't really talking about, and not even thinking about. When interest rates do drop, don't be surprised prices go up. Just watch. As soon as the interest rates come down to 6.5%, 6%, more buyers are going to be in the market. Prices are going to go back up. It actually may be smarter for you to buy now and refinance when rates go down. Why? Because you can't refinance the purchase price, just the interest rate. Prediction number two, seller financing will become the number one investment strategy over the next 2 years. Not only is this one of the most profitable strategies for investors, but buyers and sellers are going to be more open to it, because motivated sellers need to sell. I'm not talking about unmotivated sellers that just say, hey, if it sells, it sells. If it doesn't, it doesn't. It's okay. I'm talking about the people that actually have to. It's that must. For buyers that don't want to pay high interest rates, this is going to be a great solution, number one. And for sellers, they can actually sell the property at a lower interest rate for buyers that banks can't even do, because they have to follow whatever that interest rate is. This opens up so many doors for everybody. Okay. For you, the investor, you're just simply connecting these dots that we're talking about. But you got to first learn the strategy. And obviously, I've got several training videos on YouTube. And if you're a member of REIPro, well, you pretty much have the whole complete system. So from learning how to utilize the strategy, finding deals, making offers, and really deciding what that best exit strategy is going to be. And those are my two predictions. And it's really not something a lot of people are talking about right now. I want you to think about this for a second. We have a low supply of homes available compared to the number of people needing homes, which creates high demand, which also creates high pricing. But interest rates have deterred buyers from buying, which leaves us a higher inventory of homes for sale. That's insane. So, with more properties on the market, sellers are going to become more motivated. This couldn't be really any more crazier, but this presents a lot of opportunities for investors, and we're already seeing it. Situations happen for properties that are on the market, and situations happen for people that have properties that are not on the market. Just super excited. I've opened up my personal coaching. This is where I'm going to personally help you flip your first deal or expand your current business. This is a one-on-one experience. There's no third-party coaches, group sessions, just you and me. So if you're ready to fast track your success with my direct guidance, I want you to go to my website and schedule a call.
All right, I got a couple other questions up here.
All right,
Can you
go for it.
explain what lease options are?
I'm going to lease a property, but then have the option to purchase that property so the seller can't sell it or rent it to somebody else. So during that agreement period, I have the option to go to the bank, get financing to buy the house. For an investor, we stay in the middle of these deals. We educate sellers on hey, this is another smart way to sell your home. It's not all cash up front today, but if you're going to lease it because you can't sell it, this would actually be the ideal strategy. For a buyer's point of view, this gives somebody time, especially now. When we look at high interest rates, you could have actually qualified buyers right now be more likely to do lease options in order to get in the house today that they want to live in. Wait for interest rates to come down. Now, they would have to commit to that, but wait for interest rates to come down to then actually get financing, but lock in the price today, because I really see when these interest rates drop, prices are going to go up. You can get in the house today for that. And we're literally connecting the two. Now, this is also a great investment strategy if you are an investor, maybe looking for a house where you don't want to go get bank financing, but lock in the price today and then get financing down the road. So